Welcome back. You're watching Market Fatafat on ET now. We have Dhwani Patel joining us on the show now to take us through all the stocks that are actually moving on back of technicals. A very good afternoon to you, Dhwani. And Dhwani, the first stock you're going to talk about is GAIL. The entire oil and gas space is a buzz in trade today. But GAIL in particular, how is it looking on the charts?
Good afternoon, everyone. The reason why GAIL is in focus today is for the reason that on technical front, we are seeing volume increment coming in. Apart from that, the indicators like RSI and ADX are moving towards gaining momentum over here. And from the stock is already price action wise formed a base on the lower side over here at 225, from where we are seeing an upward dip continuing in this particular counter. Derivative data suggests on the higher side 250 is the next target that one can hold on for it in the short term, and on the lower side the stop loss that one needs to maintain is of 229.
Alright, those are the levels to watch out for GAIL India, but let's also talk about Glenmark Pharma. This stock is in focus for multiple reasons today. And first up, let's understand why this stock is rallying today in trade. It was up 4% at some point, and as of now also 3.4% higher. The US arm of this company has launched a generic and on the back of that, this stock is also doing pretty well. The subsidiary is called Glenmark Therapeutics Inc. and this is in USA. They've launched the olapodine hydrochloride ophthalmic solution used to treat itchy eyes. Besides this trigger, you also have a positive note coming in from Motilal Oswal on Glenmark Pharma. They've upgraded the stock to a buy rating from a neutral, hiked the target price to rupees 1,850 from rupees 1,200 earlier. They say that the growth levers across key markets are visible. They believe it is gearing up for a consistent turnaround in its overall performance. And for the domestic formulation, they've remodeled and the distribution and the in-licensing as well as new launches are also going to aid growth. For the US market, they're addressing regulatory issues and there's a niche pipeline which is vital for growth. For European Union, they say that the market share gains and expansion in new geographies will be driving growth. And for the rest of the world, they expect robust performance across regions. So positive note coming in. But let's also go across and listen into VS Mani, Executive Director and Global Chief Finance Officer of Glenmark Pharma. And he spoke about the US approvals and growth in the US market. Let's go across and listen in.
The US market has been under pressure, not just for us, but for some of the participants in the industry. So we have I'm back on of our respiratory, development capabilities. We have a couple of nasal sprays, that filings that are there. So we expect some of those approvals to come through in the second half of this year. So that's how we feel quite confident that we should be able to reach single-digit growth in the US. We have filed for it in May of 24. So I think we are hoping that we get the approval sometime, early next year or later this year.
All right, let's shift focus then to Tejas Networks, Ansh, and what's the news behind the up move in the stock today?
The company has actually received an order of 96 crore for satellite equipment from New Space India under the Department of Space for supply, installation and commissioning of two-way mobile satellite service, terminals for vessel communication and support system in marine fishing vessels for monitoring, control and surveillance as well. And the provisional purchase order would be deemed as a final or confirmed once the purchase order only after the delivery and acceptance of proto terminals and bulk production clearance by New Space India Limited. Also, if you see the stock on chart, then early this month the stock has actually taken a support at 100 DM, and since then it has been hovering just above it, keeping the bias positive here.
So that's on Tejas Networks. Dhwani, you've picked out Asian Paints on the technicals. In the last 6 months, absolutely flat, no returns coming in from this stock. So what momentum are you penciling in for this stock? Can we now expect to see some up move here?
And definitely we didn't see much momentum coming into this particular counter since February early this year, but then from there onwards the stock made a bottom somewhere around 2800 levels, and from there we are seeing a slow and steady momentum gain coming in this particular counter. From current levels, a short-term trade over here can be taken up on the higher side for 3200 as a target, and the stop loss on the lower side that one needs to maintain is of 3025.
Let's shift focus then and let's talk about Shriram Finance, because that particular counter has hit a fresh record high level in today's trading session. At one point in time, the stock was trading higher by about 3% or so, and this after HSBC has come out with a stance where they maintain a buy stance on the company, with the target price being raised to about 3,600 rupees per share from erstwhile 3,340 rupees per share. They're saying that the company is in its most convincing operating period in over a decade due to strategic clarity as well as healthy metrics. They're also saying that the stock, which is the NBFC, is a competitively well positioned among its peers. They also believe that the stock still retains several re-rating triggers. They've, however, said that the largely positive on the stock, but it sees the company's dependence on vehicle finance portfolio and a slowdown in the AUM growth as a risk. So that's the word coming in from HSBC on Shriram Finance. The stock has hit a fresh record high level in today's trading session.
All right, well, good moves coming in for Shriram, but let's also talk about Zomato, because you have a UBS note coming in on Zomato with the highest ever price target that anybody has actually given on this stock, and that is what actually led the stock to rally earlier in the day. As of now, a little flat, but it was up 2.5-3% earlier. UBS in its note has maintained a buy rating, and the target price has been raised to 320 rupees from 260 rupees earlier. They believe that the Q1 surprised positively with not only stronger quick commerce GMV growth but also a solid 27% growth in food delivery, and both ahead of UBS estimates as well as the margin expansion in both segments. Now, the company also has a superior growth and margin expansion profile is what UBS believes. So that was one trigger, and the other reason why the stock is in focus today is also because Blinkit, which is the quick commerce unit of Zomato, Blinkit CEO Albinder Dhinsa took to Twitter and said that the company has crossed all-time high orders on the occasion of Raksha Bandhan. They've also hit the highest ever orders per minute, the GMV and the chocolate sales, and most other metrics have been at their all-time high today. And they hit a peak of 693 Rakhis per minute, which is their metric for measuring the Raksha Bandhan orders. So on the back of both of these triggers, the stock was holding up well, but as of now rather flat. But speaking of Blinkit, Pankaj Murarka, CIO at Renaissance Investment Managers, says that they have established their presence in the grocery delivery business. Let's go across and listen into why he thinks Blinkit has the right to win the battle in this space.
In case of Zomato, there is a clear case that Blinkit has established a clear-cut edge in terms of over competition in the quick delivery space. And obviously, India being a very large market where grocery and retail sales are about $800 billion, we can easily accommodate 4 to 5 players. So not everyone is going to win that battle, but Blinkit clearly seems to be one of those which is going to win that battle. Now, if you put that in context and of Blinkit being a leader in the quick commerce and in the grocery segment, then I think the potential value of that business 10 years out can be significantly higher, meaning it could be equivalent of what a DMart or Reliance Retail is, or probably will be going forward as well, because the consumers are pivoting from going to malls to having this luxury of the goods being delivered to them at their home in 20 minutes or 30 minutes. So I think the growth potential is still very, very significant in that sense, and I still think that there is a long runway for growth for all these businesses. When you talk about Zomato's food delivery business, mind you, their total customer base is just about 4% of India's population. Why can't about 15-20% of India's population be Zomato's customer base? Meaning, possibly over the next 10 years, I think that could be a probability in that sense, and in which case probably the growth curve for them can be very long.
All right, on that note, we slip into a break on this edition of Market Fatafat. More stocks on the other side. Don't go anywhere.
Hi there, welcome back. We're watching Market Fatafat on ET Now. Let's keep it going with all the stocks. And on the technicals, Dhwani, give us a check on Kansai Nerolac. That's a stock you've picked out for us. Last 6 months, in fact, negative returns coming in on this stock. So are you seeing any upward momentum now? Good time to buy? What's your call?
Absolutely. Post the result of the Q1 declared, the stock had seen a rally, and in fact, we had seen on daily charts it has given a breakout which is sustaining on the higher side. The retest is already done, and now we are already ready for the next up move on the higher side. On weekly charts as well, what I see over here is that the stock is first headed to test its 200 weekly EMA, which is around 310 levels over here. Given a crossover above the same, positionally the stock looks good over here. On the higher side of 340 to 45 as a target. On the lower side, one needs to maintain a stop loss of 285. It can be hold on positionally for a period of 3 to 6 months.
All right, on that note, let's also talk about Voltas today. Voltas is in focus in today's trading session as well. And we have some management commentary coming in from their con call, and here are the key takeaways. Now, for the UCP segment, they've said that the YTD June market share also stands at 19.5%. This has risen 50 bips on the quarter-on-quarter basis and 450 bips higher than the number 2 player in the industry. Mainly, the management has also said that they aim to maintain high single-digit margin in the UCP segment, and they also aim to maintain this high single-digit margin for the segment over the longer term as well. They've started production at the Chennai RAC facility, and the water dispenser line has also picked up. They're confident of picking up orders during the second half of FY25 when it comes to the EMPS segment as well. And for Voltas Beko, they say that they aim to achieve EBITDA break-even in the near future. They're also penciling in capex of anywhere between 5 and 5.5 billion rupees for FY25. So that's the management takeaways coming in from Voltas. You also have multiple brokerage notes coming in across the board, and all of them rather positive and bullish on Voltas. So on the back of that, 4% higher is where Voltas is.
Alright, so that's all about Voltas. So let's move on. Let's talk about Sona Comstar then, Ansh. And why is this one in focus today?
So the company has received certification for another product, that is a hub-wheel motor for electric two-wheeler under the production link incentive PLI scheme for automobile and auto component industry in India from Ministry of Heavy Industries. Also on chart, we are seeing that the stock has actually given a breakout from its 10-session consolidation pattern. If it sustains above 690, then we can see some positivity here. Also, it trades above key DMA levels as well.
Alright, so that is all about Sona Comstar. Let's talk about delivery then, Dhwani. And how is this one looking in the charts?
And the results over here were surprising, and they came out very well, post which we see that the stock in the past 2 sessions has given a breakout on the daily chart above its 200 EMA, and also a consolidation zone which it was forming since May late this year. From current levels, I expect a bounce to continue on the higher side. The resistance is somewhere around 460 levels, and the support that's coming in over here on the lower side is at 410.
Talk about these state-run companies, that is the OMC companies of state-run, that is BPCL, HPCL, IOC. All three of them are seeing a good up move in trade today. Add to the list also you have MRPL and Chennai Petro also seeing a good move because the government has gone ahead and cut the windfall tax on petroleum crude. So on back of that, you're seeing all of these counters gain. In fact, HPCL, BPCL as well as Chennai Petro are actually seeing gains for about third consecutive session. And remember that you're also seeing a dip come in the crude oil prices as well, hovering around that $80 per barrel mark. In fact, earlier on, we had spoken to Dr. Fesharaki, to understand about the crude demand. We also asked him about where does he see the crude prices headed from here on. Listen in.
Demand has weakened a little bit in the past couple of months, but still very, very strong. So when we look at this fundamentals, it still looks upwards. But as I said, this is through the end of this year. Next year will not be the same. At the moment, gas prices are very strong. Spot prices are strong, and the contract prices are strong. But after 2026, 27, there is a huge amount of gas coming in, and everything is in motion. So there is no need to revisit the old theory that will happen 2026, 27 for a period of 4 or 5 years.
Alright, that's the word coming in from Faridun Fesharaki. But Dhwani, you've picked out Hindustan Copper on the charts. Tell us what levels are you spotting and how is this stock looking to you on the charts?
It's a fresh breakout candidate on Hind Copper that I have spotted over here. On daily charts, if we pull up the recent high that it had made in May, from there a downward sloping trendline breakout is what we are seeing in today's session. From current level, it's a buy coming in on this particular counter. On the higher side, I'm looking up at a target of this one positionally at around 375 to 380 levels. The stop loss that one needs to maintain on the lower side in this counter over here is of 298.
Alright, let's move on. Ansh, let's talk about GMR Airports. Why is this one in news?
So the company has come up with monthly traffic data for the July month, and according to that, the company has handled more than 1 crore passengers across all airports, which is up by around 7.7% on year-on-year basis. Also, if we break this up, then domestic traffic is up by 7.1%, whereas international traffic is up by 9.3%. Now, if we talk about charts basis, then stock had actually started with a gap up opening, was trading with 2% of gains, but due to overall market pressure, it has cooled down, but it is still trading with a gain of over 0.5%.
Alright, so that's the reason GMR Airports is in focus today. But on that note, we're completely out of stocks on this edition of Market Fatafat. So Dhwani, Amar in the previous segment, as well as Ansh, thank you so much for taking the time out, joining us and talking about stocks. On that note, it's a goodbye from Cheryl and me. But as we do that, it is now a good time to buy a car or have an SUV that you've always had your eyes on. It is not just a shorter wait list that awaits you on many models as compared to the long wait list earlier. The vehicles are also available at mouth-watering discounts. ET Now Sumit Chaturvedi decodes this transition of the market and what benefits it entails for customers. Let's go across and listen in.
The situation in Motown has changed drastically within the last year. No more waiting lists, and the discounts are significant as the auto market is witnessing a fall in demand while inventories build up. The COVID-19 pandemic earlier resulted in severe global shortages in supply of semiconductors, leading to huge waiting periods across brands. But companies slowly increased production as semiconductor availability eased, and now the market has turned. Many models and variants of vehicles are available off the shelf.
Fortunately, supply side issues are behind us. So Ertiga used to be in high demand. We have increased the capacity of Ertiga. CNG models were in high demand. We have debottlenecked some CNG production and components procurement. So cars are fairly accessible, yes.
M&M's XUV 700 has had a long waiting period running into 6 to 8 months since its arrival. But the waiting periods have now been reduced to under 2 months for all trims. Toyota compact SUV Hyrider's waiting period is also down to 2 to 3 months from 5 to 6 months earlier. Maruti Suzuki Ertiga waiting period is also down from 8 to 9 months to 3 to 4 months now. There are some vehicles with a zero waiting list, including Tata Tiago, Hyundai Grand i10 Nios, Maruti Suzuki Jimny, Renault Kwid and Skoda Kushaq. Alto K10, Espresso, Celerio, Wagonar, Swift or even the Baleno. All these cars are easily available with a maximum wait time of 2 weeks, either in their CNG or petrol formats, manual or automatic. From MG's side, Comet, Aster and ZS EV are delivered in under 3 weeks in your preferred spec and color. Discounts now range from 15,000 rupees to 20,000 rupees on many hatchbacks, while they can be as high as 65,000 on Hyundai Alcazar or 1.5 lakh on the Mahindra XUV 400 EV. However, some models and variants are still on the wait list and companies say they are increasing production to reduce waiting periods. In the luxury car market, Mercedes has a waiting list ranging from 2 weeks to around a year on its cars and SUV models, while Audi and BMW have shorter waiting times. Mercedes-Benz says that it has increased production, but it still has around 2,000 cars in total to be delivered. To clear its waitlist, Toyota's Indian arm will invest rupees 20,000 crores on fresh capacity creation in Maharashtra.
I can tell you that the waiting list has come down drastically. And that's because of the number of steps that we've taken, which includes the start of the third shift, which has added a capacity of around 32,000 new vehicles per year, which is around 30% increase in availability of the vehicles that we put on the roads. In terms of abnormal high levels of inventory at the dealer side, that's not what we are witnessing.
However, currently it is the monsoon season and the coming Shraddh season when there is less demand for cars and more discounts and higher availability. Companies warn that with the festival season kicking in, the waiting list on a few models can get longer, and so the current climate offers a unique opportunity to take advantage of significant savings and less waiting. Sumit Chaturvedi, ET Now. If you like this video, then like, share and subscribe to ET Now.